please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's a good start to the new series. Hello and welcome to Chartbusters. I'm Nigel D'Souza and with me is Mangalam Malu. Hey Mangalam, good to see. After the kind of bashing we got in the last series, we're holding virtually at the high point of the day. The Nifty is holding with a gain of around 50 points odd. And really the Asian markets, they were holding in the green. But we as well, we're managing to hold on to those gains. Important to see the Nifty Bank as well has popped up in trade. We're doing a relative outperformance, I think. Today Hang Seng actually is doing quite well in today's trading session. So good going.
Good going indeed, and the good part is the mid-cap index. That one's doing well. As we speak, it is at the high point of the day with strong advanced decline ratios. In fact, if you take a look at the difference between the green and the red lines, they have only increased, indicating that, yes, there is inherent strength in the broader markets. And when does that happen? When perhaps maybe they believe that there is limited downside to the frontline index itself. We're above that 100-day moving average on the Nifty. Let's see whether that will be supported or not. So first up, we'll get you all the top stories that we're tracking at this point in time and more on the markets and individual stocks as we go along the show. First one, Sun Pharma rebounds today, the top gainer on the Nifty as the street expects Halol plant inspection to end today. The stock has recovered 10% from the lows that hit on Wednesday.
And Federal Bank gains close to around 4% on plans to acquire 26% stake in Aquarius Capital. Jefferies say that the stake buy augurs well for the bank. They maintain a buy rating, target price of around 145 rupees per share.
Fortis Healthcare continues to be on our radar. The stock is in green today after Malvinder and Shivinder Singh assure investors say we are not going anywhere and we will not shy away from any questions. However, promoter holding in the stock has come down to 3%.
And Jubilant Life, that's down close to around what? Around 8% as we speak. Remember, 3.5% equity. It changed hands early in the morning between a price of around 915 to around 940 rupees on a per share basis. Sources tell CNBC TV18 that the promoters are likely to have sold the 3% in the company. Okay, all right. We're holding well in the green. Well, in fact, Mangalam, are you looking to give anyone a card over this weekend? I ask you that because I'm looking at Archie's. And Archie's suddenly, that's not only a stock we talk about, but I'm sure Mangalam has some plans over there. Let's pull the intraday chart. Mangalam, just take a look at that. Tell us.
I'm not looking to give a card to anyone, but what I'm actually looking at is Zycom with low volumes and Tilak Nagar Industries. Are you installing CCTV cameras or giving sort of country liquor to people?
Mangalam, I'm, none of that. Teetotal as it is, so don't talk about all this Tilak Nagar. But any which ways, let's get in Ashwini Gujral to talk about the markets. Well, Ashwini, after the week series, we have seen a good bounce in today's trading session. Looking good for more. What would your trade be on the Nifty?
See, all of last year, traders had this problem that nobody was on the other side. So this year, it looks like fun because the Bank Nifty is finally making that 250-point move in the first hour. A lot of it is short covering. Whether it's the real thing, we'll probably know from tomorrow, day after, etc. But right now, we could be in a fairly long pullback. And unless you people start talking about if this is the real thing, it won't end. So, it'll almost make you believe that, the bull market has restarted and mid-caps recover and banks recover, etc. But this could be a fairly sharp and strong pullback. That does not mean it will continue. It just means that the power of short covering will be so huge that the gains will look large within a short period. As far as individual stocks are concerned, IGL is a buy with a stop of 295, target of 312. NBCC is a buy with a stop of 292, target of 310. JSPL is a buy with a stop of 250, target of 268.
All right, Ashwini, a word on Page Industries. That one has suddenly taken off at the high point of the day and has reversed all the gains or losses that it saw in the earlier part of the week, now up 2.5% for this week itself.
Page Industries is not really your classical F&O stock, although it went down as low as 18K and kind of now consolidating in this 21.5 to about 2300 zone. What people need to keep in mind is go after the stocks where shorting happened while the fall was happening. I mentioned metals, I mentioned PSU banks in the morning. that's where you'll make the best money. If something didn't fall, that's not really going to make you a whole lot, and that is why IT is doing much worse than banking today. So the way to play short covering markets is to buy stuff that got bashed up.
All right, Ashwini, thanks a lot for that. In fact, as you speak, a couple of these metal stocks are at the high point of the day. We have Nalco. Remember, the management was speaking to us yesterday. That stock's moved to the high point of the day. And we have SAIL. That one too is closer to today's, to the higher end of today's trading range. 50 points on the Nifty. Nigel, we lost 687 points in the February series. 50 points today. What's the road ahead?
You know, Mangalam, the bulls were not very happy with me because I've been telling you all that, in fact, it's the third worst series that we have seen in the last decade or so. So they were saying, no, Nigel, you're not supposed to look at this data this way. You're supposed to put it out in percentage terms. You're supposed to put it out in absolute terms.
I got those tweets too.
Yeah, so, you know, let's just put everything upfront for our viewers then, in percentage as well as in absolute terms. You know, so the last series, well, it wasn't a great one. As you said, 687 points is what we lost. Now, in January 2008 and October 2008, they were very, very bad. We lost between 900 to around 1,400 points or thereabouts. But just take a look at the next column. The next day of the next series, post such a dismal show, then in fact we put on 180 to around 189 points. Remember, that's coming on a much smaller base as well. So if you pull up the next plate, you'll see that in fact, you know, after losing nearly around 16%, on the first day of the next series, the Nifty bounced 3.5%. Even in October, after losing 34% on a much smaller base, it bounced around 7%. February series, I don't know whether, you know, today we can see a 3.5 or 7% because I don't know whether or not that can possibly happen. But if you pull up the previous split, 180 points where the bulls will be very, very happy. You know, so just some historical data. I just thought it was rather interesting to put it out after such a weak series. What happens next? Okay. Let's see.
Pharmaceutical stocks, they have taken off, and how? We have Aurobindo Pharma. That one's up about 4.2% at the high point of the day. We understand that there could be a brokerage note, or there is a brokerage note which is doing rounds, though we do not have the official document. However, that is perhaps one of the reasons why Aurobindo Pharma is surging. Then we have a couple of these IT stocks which are moving as well. HCL Tech should come up for you. And from the fertilizer space, UPL, that one is at the high point of the day. But the stock on our radar right now, Pratap Snacks, in focus on the back of a brokerage note. Edelweiss had met the company's management and they have given an outlook on the stock. So to detail the company's business prospects going forward, we are joined by Mr. Amit Kumar, the MD and CEO of the company. Thanks a lot, Amit, for joining in. Edelweiss report suggests that, you know, 18 to 20% growth is what you can do basis a lot of the initiatives that you're taking. We'll talk about those initiatives, but 18 to 20% growth over the next 3 years implies 1,500 crores on the top line and roughly 150 crores in terms of EBITDA by FY20. Do you think you can do that?
I think we can do that. If you see our last 5-year growth chart, we have grown by 27.53% CAGR. We're definitely looking at 18 to 20% growth for next 3 years.
All right, Amit. So you're sounding quite confident. That would mean that margins of what? Around 9 to 10%?
9 to 10%. That's our target.
Okay, Amit, I want to take that point forward. You know why? Because packaging costs have gone up. Okay, that's point number one. The second point is, I think in this recently concluded budget, palm oil import duty was increased. You can correct me if I'm wrong, but various input costs have gone up. So still you believe that you can not only, you know, grow the top line, but you can also expand your margins?
I am very confident of growing the top line. On the bottom line basic, I believe there would be some pressure for next 2 quarters, but we can control that by reducing some grammages.
What do you mean by pressure for the next 2 quarters?
Because the edible oil duty has increased from 10% to 35%. And laminate prices have gone up because of the crude pricing.
Right.
But we are covered in raw material for the next quarter. But there would be some pressure on the margin. If there is more pressure, we can reduce the grammages in our pack.
Okay.
But we are definitely looking for 9 to 10% margin.
So edible oil duties have gone up from 10 to 35% is what you're telling us.
Right.
And how much does that constitute in terms of your total costs?
I think it was close to 0.5% EBITDA.
0.5%. Okay. So the next 2 quarters, you're expecting some bit of pressure on margins?
A little bit, very little. That can be countered by a little bit reduction in the weight.
But you're going to reduce the weight. Your consumers will not be happy.
So for this quarter, we are already covered for the oil and the laminate pricing. For the next problem, if the prices doesn't go down, then we might think of reducing them some rate. Not right now.
What is your internal assessment? I mean, what is your hurdle rate for your margins to sustain? Or what is the lowest level below which you will have to actually go ahead and cut your grammages?
8%. 8% is the lowest level we are looking at.
Okay.
And you're talking about edible oil. You're importing all of that, or you know, what's the mix over there?
So, we use palm oil. It is 100% imported oil basically. So all the oil refineries like Adani and Gokul, they import and we buy from them. We don't import directly.
All right, and that could maximum hit your margins by 0.5%.
Yeah.
Okay, all right. Amit, I wanted to ask you another quick point. What about your current market share? You know, I have some broad details. In namkeen, you had around 1%. In chips, you had around 3%. If you get to the 1,500 crores, you know, what would your market share grow to? And if you could tell us, what are the recent details that you have with you in terms of market share?
So currently, probably we feel that we are on at 5% market share, and the total market is going at 10 to 12%, and we intend to grow by 18 to 20%. So if we can continue this for next 3 years, probably we would be in 7 to 8% market share range.
Okay.
Okay, fair point there. If you could tell us the increased revenue that you will get from your foray into new geographies. We understand you've tied up with plants in both Ahmedabad as well as Bengaluru. How much more will they add in terms of your revenue?
So I think we have increased our potato chips capacity by 50%. We started one operations in Ahmedabad, one in Calcutta and one in Bangalore. So that could give an additional revenue of 100 crore rupees. We have also launched 2 new products. One is nacho chips for the first time in the country at a 10 rupees price point. And curd we have recently launched at a 5 rupees price point. So all these new products and adding deeper distribution in the current geographies going into the southern India market, we are looking at 18 to 20% growth, all put together.
Hey, 18 to 20%, you're sounding very confident, Amit. You know, we're going to hold you on that one. FY 20,500 crores and 150 crores on EBITDA. That's something that, you know, seems to be the key focus points of the street. But I also wanted to ask you about your sweets category. You know, you have some sweet snacks category that you'll be launching in the next year. How do you see that scaling up? Can you do 30-40 crores next year, and then after that you can scale it up further from there? Give us some clarity over there.
We have just recently launched Yampa in that category. The current year revenue is very small, but next year we are looking at 40 crore revenue from the sweet snack category, which can grow by easily grow by 20% for next 2-3 years. But it's a small category right now.
But Amit, there's a lot of competition as well, right? We speak to Britannia, they're coming out with their Chipita range. We have a lot of the other companies, they are looking at sweet snacks as an important category. You're not the only player out there. So do you still think you can do 20% revenue growth out there, and will the margins out there protect? What are the kind of margins that you enjoy on those sweet category products that you've launched?
So the margin in the sweet snack category is better than the savory category, but because the current base is very low, it would be very easy for us to grow by 20% in that category.
All right, Amit, thanks a lot for joining in. So that was the management of Pratap Snacks. So very confident of getting a 1,500 crore top line by FY20 and margins between the range of 9 to 10%. However, the street doesn't like the fact that the next 2 quarters will be a bit of a problem, and the consumers will definitely not like if the grammage is reduced. Sure. I mean, any which way there is more air in a packet of chips than chips, right?
Absolutely. But you know what I liked, Mangalam, was that the promoter, we have a lot of promoters who come on the show and they give once the guidance and they think again whether or not they can give it. But he's saying 18-20% non-stop. So, you know, we have to look out at that number of around 1,500 crores. It's going to be a tall ask going at this kind of a run rate. But good to see confidence coming in from the management. Let's see where the stock goes from here. But the commentary at least was quite positive. And the other important part, the duties on edible oil, that's gone up from around 10% to around 35%. Right, we're holding with some good green then. The Nifty is virtually at the high point of the day. The banking stocks as well are participating. But we're lucky we have Naveen with us in the studio. There are plenty of stocks moving around. Naveen, tell us all the stocks that are on the news today.
Quite a few, Nigel. I'll begin with Federal Bank. So the board of Federal Bank has approved acquiring 26% stake in Equirus Capital. In fact, Jefferies maintains a buy on the stock with a target price of around 145 rupees. Stock is excited in trade today, up by almost 5%. On the other hand, ITD Cementations came down with numbers at the fag end of the earnings season. In fact, the earnings season had ended, but strong set of numbers. If you see the margin, they have almost doubled from 7.5% to 13.5%. So that is one thing which has been positive for the company. Merck also is one stock which is in the green in today's trade, given the fact that the revenues have jumped by 22%, but look at the net profit, a jump of almost 42%. JP Infra is also one stock which is excited and buzzing in today's session, given the fact that sources, they indicate that the JSW group has offered the highest bid for JP Infra. In fact, they will be taking out almost 9,900 crore worth of debt from the initial trading session itself today of almost 3.5%. And what we understand is maybe the promoters might have sold. It's not confirmed, but still the stock is down close to 8%. On the other hand, Fortis, maybe in the last one series, this is one stock which was the most interesting. And over there, the promoter holding, look at that from June 2017, from 43% comes down to less than 3% as per yesterday's filing data.
Well, Naveen, very quickly, you know, I just asked Mangalam about Archie's, but a lot of viewers are messaging and they're asking, they're saying 2 eligible bachelors in the team, Mangalam and Naveen. Mangalam is saying he's not giving a card. Is it you?
No, for sure.
No, I think it is you, Nigel. Given the move, it's 15%. So I think you're giving to your wife.
All right, let's go on.
All right, let's move on then. I believe we have Mr. Uday Kotak's commentary coming in an exclusive conversation that he had with Shireen Bhan. He expects NDA to win in the 2019 polls. Adds that he is bullish on the road construction and the auto space. Stay tuned, after which Trading Hour comes up next.
My view is India also did very well in 2017. Sure. So we are giving up some of the wonderful gains we got last year. And I would be much less concerned about where we are doing vis-a-vis others. Finally, we got to draw our own future. And I think we also got to keep in mind that markets, as we go forward, will want to price in what they see as the political outcomes in 2019. The current base case of the markets as it stands today is that the NDA government in some shape or form comes back. However, as the 2018 rolls forward, markets will still begin to evaluate this as well. Therefore, in addition to macro, the politics is a factor in the context of a significantly improving micro.
So what does that mean in terms of flows then? If you're saying that the market is also going to start to factor in the outcomes of crucial state elections and of course the big general election in 2019, and you know, there could be a repeat of the performance that we saw in when this government came to power, or it may be a different story, we don't know. But what is that going to mean both in terms of domestic flows as well as foreign flows?
I think we got to see the time. The good news, as I see it, from the point of view of being a practitioner in India over the last many years, is a statement which I always make, that at any point of time, India looks challenging as a photograph. But India is wonderful as a movie. Therefore, if you're invested in the movie called India, just stay the course.
Okay. So which are the sectors that you would then bet on? Which are the sectors that you believe, despite the fact that valuations may look stretched, etc., that still have growth potential?
No, right now, as we see it, we are seeing very good growth in road construction. We are seeing pickup in the activities around construction equipment. We are beginning to see this year also rural India, especially on our tractor. Very often we mix rural and agriculture as one-to-one correlation. Rural economy is also getting broader. Therefore, there may be pockets where there may be challenges in agriculture. But the broader rural economy story this year is looking better. And then you got, I think, the auto sector in totality also looking pretty robust. I'm seeing companies begin to do brownfield investments as well. May not be enough greenfield. And then finally, if the declogging of the system happens through NCLT, I think that should be helpful. Yes, I think haircuts will be there. I think the first few results on the steel companies seem to be good, but that is not the average. So while the haircuts will be there, at least we will hopefully in 2018 declog the system.